All right, today we're pulling back the curtain and talking about something called order flow. You can think of it as the secret language of the market, the thing that shows you the real story behind every single price move. It's all about understanding the why, not just the what. So let's get right into it.
We've all stared at a chart like this, right? A bunch of green and red candles. Now, this tells us where the price has been, for sure, but it leaves out the most important piece of the puzzle. It doesn't tell us why it went there. What were the hidden forces that actually pushed that price up or slammed it back down? Well, that's the mystery we're going to solve.
And this right here is the whole game. A normal candlestick chart is basically a history book. It's telling you what already happened. Order flow, on the other hand, is like getting a live feed from the market's engine room. It shows you the real-time battle that's pushing the price around right now. We're shifting from looking in the rearview mirror to looking right through the front windshield.
So let's start digging into this hidden story. To really get it, we've got to start with the one fundamental rule that's behind every single trade that ever happens.
You see, the market isn't just some random thing. It's a constant, never-ending battle. Every tick up, every tick down, that's just the result of one side winning a tiny little skirmish in a much larger war.
So, who are the fighters in this battle? Let's meet the two sides of the coin, because understanding their roles is absolutely key to, well, understanding everything else we're going to talk about.
On one side, you have the passive participants. Let's call them the waiters. They're patient. They put their order out there at a specific price and just wait. Then you've got the aggressive participants. We'll call them the takers. These are the impatient ones. They need to buy or sell right now, and they're willing to take whatever the best price is to get it done.
So the tool for our waiters is the limit order. This is basically you putting your hand up and saying, hey, I'm willing to buy right here at this exact price and not a penny higher. I'll wait. These are the orders that build the structure of the market, those walls of supply and demand you always hear about.
And the takers, they use the market order. This is the I need in now button. It's an order that screams, just get me in. I don't care about the exact price. Just fill me at whatever is available. These are the orders that get things moving. They go out and find those patient limit orders and boom, a trade happens.
Okay, so now that we've met our waiters and our takers, let's see how they interact. Because that interaction, that's the literal engine that drives prices up and down.
This is the one unbreakable, non-negotiable law of the market. A trade only happens, when an aggressive taker smacks into a passive waiter. You will never, ever see two aggressive market orders trade with each other. It just can't happen. It's always action meeting patience.
So here's the life cycle of pretty much every trade. First, you have patience. The waiters set up their limit orders, creating these pools of liquidity. Then comes the action. An aggressive taker comes in hot with a market order. That leads to the transaction, where that market order literally takes the best available limit order off the books. And the result? A trade goes through, and the whole balance of the market shifts, even if it's just by a tiny bit.
You know, the best way to picture all this is as a giant tug of war. At every single price level, you've got aggressive buyers pulling on one side of the rope and aggressive sellers pulling on the other. And the rope itself, that's all the passive orders trying to hold their ground. And here's what that tug of war looks like in practice. It's actually really simple. The price moves up when the aggressive buyers are just so strong they yank the rope right through all the passive sellers at one level and move on to the next. The price moves down when aggressive sellers do the exact same thing to the buyers. And when the price just chops around and goes nowhere, well, that's when both sides are pulling with equal force. It's a temporary truce.
Okay, so this all sounds great, but if this whole battle is happening behind the scenes, kind of invisible on a normal chart, how in the world do we actually watch it? Well, let's open up the special toolkit that traders use to see inside the market.
These are the big three. Don't think of them as complicated charts. Think of them as different pairs of X-ray goggles. Each one gives you a totally unique view of that hidden battle we've been talking about.
First up, volume profile. This is basically your market history book. It shows you at a glance which price levels have been the most popular places to trade in the past. It's a map of where the market has found value before, and those zones are often super important.
Next, we have the heat map and the depth of market, or DOM. Now, if the volume profile is the past, the DOM is the living, breathing present. This is your live look at all the passive waiters. You can literally see where the huge walls of limit orders are sitting right now, just waiting for the price to come to them.
And finally, my favorite, the footprint chart.
Man, this is like putting the market under a microscope. It takes one of those boring old candlesticks and just cracks it wide open. It shows you the exact number of aggressive buyers versus aggressive sellers that fought it out at every single price inside that one candle. It is the most detailed view you can possibly get.
So what's the big payoff for all this? Why go through the trouble of learning these tools? Well, it's about making a huge shift from just guessing to actually having real insight.
This quote really just says it all, doesn't it? It's the difference between seeing a shadow on the wall and turning around to see the actual object that's casting it. You stop reacting to the effect, the price move, and you start analyzing the cause, the order flow. And here's a perfect real-world example. Imagine you see a tidal wave of aggressive buying hitting the market, but the price just isn't moving up. What does that tell you? It's screaming that there's a huge invisible wall of passive sellers just soaking up all that buying pressure. That's a game-changing piece of information you would never see on a normal chart.
And this is the bottom line. Without order flow, your trade ideas are based on shapes and patterns. It's subjective. With order flow, you're building a case based on hard, real-time data. And maybe most importantly, you're not just guessing where you might be wrong. You can see the exact moment the data tells you your idea isn't working anymore. It's a whole new level of precision.
Look, at the end of the day, this isn't some magic crystal ball. Nothing is. It's simply about trading with your eyes wide open. It's about getting a much deeper, evidence-based understanding of what's really going on so you can stack the probabilities in your favor.
So the next time you look at a price chart, just remember that hidden story playing out underneath. If that chart is the story, then order flow is the language it's written in. The only real question is, what are you going to choose to read?